Hi, my name is Chris Mancini. I'm the Associate Portfolio Manager of the Gabelli Gold Fund. I'm here today to talk with the chairman of Agnico Eagle Mines. Agnico Eagle is an extremely important position for the Gabelli Gold Fund. It has been so since I've been here, which is 16 years, and preceding me, it's been a core position for us and something that's done extremely well for us over time. And I'm very happy to have here with me today Sean Boyd again, who's the chairman of the company of Agnico. So just to introduce Agnico, Agnico is a $35 billion US market cap company listed in Canada, around 3.5 million ounces of annual production. Around 85% of that production comes from Canada. The other 15% comes from very safe jurisdictions, so Finland, Australia, Mexico. And one thing that we really like about this company is that it's been able to grow on per share metrics. So what that means is that the shares outstanding haven't grown too much, but its production has grown, its free cash flow has grown, and its dividends have grown. So all of those have grown on a per share metric. So that's value creative to us as shareholders. And so very happy to have Sean here. And I'll kick it off to Sean. Just want to ask Sean. So Sean, if you can just go through from the start, just a little bit of your background, where you were born, where you went to college, what you majored in, and then when you started at Agnico.
Sure. Thanks, Chris, and great to be here, and always a pleasure and fun to talk about the history of Agnico and how we've worked hard to build a really great business that just happens to mine for gold. My background, I grew up in Toronto and just north of Toronto, son of a policeman in Toronto, so humble beginnings, but went to university in Toronto, got a business degree. But it was interesting when I was thinking about what I was going to take in college. I'm sitting at the kitchen table and I'm actually applying to go into physical education. And my dad walked by and he said, "So you're applying for university, what are you doing?" "I'm going to do phys ed." He goes, "Phys ed? Why would you do that? Why don't you do business?" So I said, "Okay, let me do that." So it's funny how things work. But the beauty of the attraction is I had worked at an investment dealer, got some exposure to mining, and then went to get my CPA at Ernst & Young. And we got a new client in 1983, and that client was Agnico Eagle Mines Limited. And so I went over there, got to know the team, and they hired me after a couple of years of paying me as their accountant through Ernst & Young. And I joined there 39 years ago, May 1985.
Okay, great. That's fantastic. So can you then tell us about what happened when you were at Agnico, what the company was like, and then how you progressed through the ranks from being an accountant there to then being eventually the CEO and the chairman, and kind of how the company has changed since you started?
Sure. Started as the controller. There were only 5 people in the head office at the time. And a bunch of my friends who were at Ernst & Young were leaving to work for large public companies. And they'd say to me, "Why are you working at that place? It's small. Doesn't seem to be a lot of future there. Why don't you come work for us? They pay us a lot more than you're getting. We get a company car." And I said, "No, I'm good here." They were paying me at the time 29,000 a year Canadian. My friends were getting paid a lot more. And the reason I liked it, because I liked the people. I liked Paul Penna, who was the founder of the company. It had a great culture. They treated people well, and you could just feel that it was a really good place to be. So that's where it started. Very small, humble, one mine, essentially gold mine, which was actually running down. We had some small silver mines, which were also running down. But even though it was small, and it wasn't one of these big companies, I was right in the middle of it, having 5 people in the head office. So I knew that I was going to be able to learn a lot. And I've been there for 39 years.
That's okay. That's great. And so you eventually became the CFO and then the CEO, and then the chairman. So yeah, how did that work? And how was that? Like, what was the change like going from, say, the CFO to the CEO role? How was that transition?
Well, I was a controller for 4 years, and then CFO for 8 years, and CEO for 24 years. So It was a logical progression along the finance side. And in those days, it was all about capital markets and sort of understanding how you were being responsible for the share count and how you were using the financing angle to actually fund geology, basically. Could you turn in these things into mines? Could they ultimately become bigger? So being right in the middle of it, I was perfectly positioned. And unfortunately, Paul Penna passed away in 1996. We had an older operating gentleman that was the CEO for 2 years, and I became CEO in 1998 at 39 years old. And my job really, and I think the reason the board gave me that responsibility is we were a small company, 50 million in revenue. Our EBITDA back then was only about $3 million. We were not making money and we didn't have any money, but we had a pretty good project in LaRonde that was a world-class deposit that needed to be expanded. So I think why I got the role is because we needed to raise some money. And within 3 months of getting the job, we went out and becoming CEO. Within 3 months of that, we went out, secured the money we needed to take LaRonde to that next level. And that mine's been producing since 1988. And ultimately, it'll play out as being the largest gold-bearing massive sulfide deposit in the world. So good geology, and it was really being in the right spot at the right time.
Right. Okay, I got it. Okay, great. That makes a lot of sense. So LaRonde, yeah, so great asset, still producing, as you said. I've actually been to visit the mine. It's very, very deep now, but still, very good grades. Produces a lot of gold. I think like 300 and something thousand ounces of gold a year, from what I can remember. Right. So was that what do you think was the most important element then to kind of take the company from that level of a single asset producer to now multi-asset global leader? Was it having that really core, solid cornerstone asset? How does culture play into it? And like what was it? Was it, or what do you think it was that really brought the company to that, from where it was to where it is now?
I think it was because we never set out to actually create the company we've created in terms of size and scale. Unlike a lot of our competitors that have come and gone and have disappeared, they were more empire builders. We actually knew our role. We were managers. We owned stock, we were owners, but our first job was managers. And so we understood our responsibility. Our responsibility was to our shareholders to create value over time, as you said, per share value, so very tight with the share count. Our responsibility was to our employees to make it a great place for them to come to work. And we also had a responsibility to the communities that we operated in, to be big contributors to those communities. So that was our mission statement. It's been the same for decades. It hasn't changed. So we actually understood our role. We understood what we were good at. We didn't have a lot of layers of bureaucracy where we would sort of get bogged down because we were unable or unwilling to make decisions. We were actually willing and able, and did make a lot of key decisions based on geology and geological upside. Keep the risk level low, take risks based on your team's assessment of the geological potential, and follow that geology. Don't follow it everywhere in the world. Mining's tough enough. So we kept that political risk level low. It was all about, and this was drilled into us by Paul Penna, is that, look, our job is to be responsible with the shareholders' money, but the shareholders are here because they want high quality exposure to gold. And to get high quality exposure to gold, the shareholders want to understand the risk level, and generally they want that risk level low. They're okay to take gold price risk, but they want to be sure that the managers are being responsible with the shareholders' money, but they also want to be sure that the strategy that the shareholders are buying into is not going to change all the time. So we've been consistent. We know what we're good at. We stick to it, and we've done it consistently over time, and we've delivered for all of our stakeholders. And we find ourselves, 30 years plus years on, being, the second biggest gold company by market cap, the largest market cap mining company in Canada. And it's not just what that is, but it's how we did it. And we've created a
Right.
great business that's uplifted communities, that's created great opportunities from our employees. I think we've got 17,000 employees now. When I first started there may have been 400 employees. The market cap in 1998, when a lot of us got our sort of big jobs and I became CEO, was 200 million. And as you said, it's 35 billion. And we got there because we were just focused on building a great business that happened to mine for gold. And
Right.
we weren't just focused on, hey, let's just go out and buy everything that's out there so that we can get to a certain size. That never works. It's quality first, scale and size second, and deliver on per share value. And we've run the numbers, and you go from late 98 to 25 years on, late 2023, our stock is up 10 to 12 times. The closest big competitor to us, their stock's only a double. And the second biggest competitor is flat and others are down. So, that's the track record. And it was because we were disciplined and we knew what our role was.
Okay. So Sean, so as you're like this great, you and your team, great capital allocators and risk managers, and again, the team in terms of great assessors of geology and all these kinds of things, and you're building this business by buying these great ore bodies and developing them and all that kind of stuff. How do you then, as a management team, ensure that the culture of the business is developing in the right way? And who's in charge of that? And can you talk for a sec about what Agnico's culture is? I mean, I was going to ask, could you sum it up in one word? That's might be a dumb question, but
Yeah.
but just in terms of like how does, as a manager, as the boss, how do you really develop the culture as this business is growing based on risk management, financial returns, the quality of the ore bodies?
Yeah, that's a great question, and it's hard to really nail down. But our former chairman used to call it the culture of the heart, and that would certainly be what Paul Penna was like as an individual. And we use the story. When I first started, even though I was the controller, I really didn't have a well-defined role. I was also the delivery person, as funny as that may seem. And what would I deliver? This was the interesting part, is that the area I sort of lived when I first got married, lived in an area that Paul Penna was familiar with, had friends there. And around the holiday season, he would give me white envelopes, which I knew were full of cash. And I'd go and knock on doors and I'd present them to families who were clearly in need. And so I could see that at a young age. But here's the best example. We were in a meeting, the phone rings, we're sitting around the boardroom table. Paul leaves to take the call. He comes back, he goes, Sean, here's the keys to my car. And he always drove a 10-year-old two-door Chevy Caprice. And he said, you know where I park? He said, go downstairs. He said, there's a jacket in the trunk, there's some food, and here's $20. There's across the street on the northwest corner, there's a gentleman named John. He's sleeping on the grate. Go down and talk to him and give him the food and the jacket. And so I went down there, I spoke to him, gave him the money. And it was amazing when you think about the CEO of a company. Not only does he know the street person's name, he knows their jacket size. And so that's the sort of upbringing of the company. And we've sort of stuck to that. And it's really to treat people properly, treat people with respect. If you get people that aren't treating people properly and treating with respect, don't wait. You got to get rid of them. You got to move on from them. And it's one of these things where we don't sort of sit there every day and say, what do we have to do to culture? You have to be watchful. You have to sort of pay attention. And I would use the other example of LaRonde. The adjoining mine next door was heavily unionized and quite a radical union. We were never unionized. And we were right next door mining the same ore body that happened to be, split up by a man-made property boundary. And there would be relatives working on either side of that property for each of the companies, and they could never unionize us. And it was largely the way we treated it. So that culture, what it does is that not only does it make you feel good about what you do, but when you have that culture, that your workforce, when they're showing up each and every day, they're mindful of their own safety, but also the safety of the people that work with them. But they're also showing up to make a contribution every day. They're not just there to punch the clock. And I think that's been a big part of our success, is we know going in that we're going to get that that contribution from the workforce, but we also know when that workforce is living in a community, they're making a contribution, they're helping out. So as CEO, my job was made a lot better because I knew as our people went into new areas and opened up new mines and went into new communities, I never had to worry about how our people were treating their workforce or treating the community. So it's been a huge part of our success. And as chairman now, that's a big part of my job. Just pay attention to that. You know, get around, keep my eyes open, keep my ears open, you know, make sure we have those values as we expand. But here's the other thing as well, where I look at some of our competitors, who may not have quite got that culture right. It was partly because of the way they built their company. They went out and acquired culture because they bought big companies. We actually acquired assets. We actually acquired geology for the most part. And then we put our own culture around that geology and deposit as we turned it into a mine. Yeah. So that actually made our job a little bit easier in terms of how to preserve and keep the culture strong.
Yeah, that's interesting. No, I was, as you're talking about that, I was remarking, you know, in my own mind about how I noticed, and you guys are really good at bringing around, or you're really good at having us up to your mine sites. So I visited many of your mines all over Canada, and one in Mexico actually, and then also you're really good at bringing your management around to see investors and shareholders. And one thing that I've noticed in all my site visits and also in all the meetings with other management is that there's really like a humility and a humbleness about the managers that you bring around, you know, or whether it be the chief operating officer of the northern operations or CFO or whomever. It's really a nice thing. It's really a nice sense to get. I was going to ask about how does culture contribute to financial success? Can you give an example? I mean, I think you were talking about that in terms of being able to operate all of these mines in these great areas and not have, having a level of trust with the employees and with the community that's been established over time. I mean, is that right? Is there another way that you can kind of talk about it, or is that maybe the best way to talk about how the culture contributes, how the great culture that Agnico has contributed to the great financial success?
Yeah, I think you hit on it. It's the word trust. And trust goes both ways. It's the trust that we have in our workforce, and it's the trust that the workforce has in us. And I can give you a few examples. Back in 2013, gold falls $400 or $500 over a 6-week period. And a lot of our peers in the industry are announcing, massive layoffs within a week, within 2 weeks. And our shareholders were asking us after that, well, what's Agnico going to do? We haven't heard from you yet. And our response was, well, this takes time. You can't just respond within a week. Gold's down. We understand that. But we have to work with our employees to come up with the right solution. And it took us 4 or 5 months to do that. And in a non-union setting, we were dealing with a collaboration committee, which are lead employees that the employees select to represent their interests, not a union. And we basically sat down with them and said, look, the objective here is to have minimum impact on the workforce. And so what we're going to need is we're going to need some give back in terms of dollar savings to the bottom line. And we will do it around, tweaking the stock option plan, the employee share purchase plan, et cetera, to minimize the headcount. And the response we got from the collaboration committee was, and that's what told us we were on the right track. Look, Agnico's been so good to us for so many years. It's time to give something back. And I still remember the number was 60 people that it affected. And a lot of that was early retirement. And many of those people I called after that because I knew them to speak to them personally. And they were good with that. They said, look, maybe it was a couple of years earlier than I wanted, but this worked. So it goes both ways. And I think the other one from a community perspective was during COVID. And COVID, as everybody knows, third week of March 2020, everybody's heads are spinning. What is this? What are we going to do? And our number one concern was our Inuit workforce in Nunavut, because living in small communities, multiple generations in small houses without medical capacity, we wanted to make sure we didn't inadvertently bring COVID up to the sites as we were bringing in skilled workers from the south. We set up testing within weeks, but the number one thing we did is we sent the workforce home, the Inuit-based workforce home, and we paid them for 18 months. They stayed home for 18 months.
Wow.
And there was 450 of them. And that just shows you that it's the concern. We put the interests of the workforce and their families at the top of our priority list. There was a dollar cost to that, but it was really an investment in the future to allow us to do more. And so those are the things that I think are good examples of that trust going both ways. And I think the other thing is trust with shareholders. Everybody knows mining's tough. We're dealing with nature. Stuff does happen. And I think Agnico's built a solid track record. When stuff happens, we're not hiding under our desk. We're out. We're talking to our shareholders and saying, look, unfortunately this happened, or we screwed this up. Here's how we're going to, fix it. And I think that plus the trust we have in our ability to bounce back and that resiliency that we've had over years has allowed us to get to where we've gotten to.
Yeah, no, that's great. I do remember, now that you mention it, that really hard, that when there was the seismic issue, the ground control issue at Goldex, and I mean, you guys were on that. And can you actually talk for a second about how you worked through that? Because you did it for some other companies, it might have been fatal to some extent, not necessarily fatal, but you guys really were on top of that. And I remember you're sitting in our office here and just really addressing the issue head on. And Goldex is now operating, and it's a fine, producer and a very profitable producer for you guys.
Yeah, that's another great example about working with the community, working with the employees, and working with the shareholders on an issue. So we had some instability in the ground, and we had one consultant telling us, if there's a potential issue, here's our work. And what they were telling us, we weren't really seeing day to day in the operations. We weren't really seeing. We would have expected, well, if what they're saying is true, then this, and this should be happening, but we weren't seeing that. So we got another opinion, and the second opinion was, well, we don't quite see it the same way the first consultant says, but you could have a potential problem. And so I remember the board meeting. And so I was notified on a Friday afternoon by our COO at the time, Eve. I called the chairman that evening and said, looks like we could have a potential issue. And so on Saturday, we made the decision that, we're going to close the mine, but we need to have a board meeting. So by the time we got the board members together, it was a Tuesday and it was an afternoon, and we're going through it. And one of the board members, as Eve was taking them through the consultant report, said, Eve, what time does the night shift start tonight? Like, well, what time are they coming? Well, they'll be coming now, and they'll be going underground at 4 o'clock. And he said, could you just put that on hold? Let us sort of understand it. Just put it on hold and, take us through this. We need to understand it. And the decision was made at that board meeting to shut the mine down. And so the team did an unbelievable job with the workforce, the employees, the community, et cetera, explaining the issue. And as you know, that mine is a mile from McDonald's in a town of 40,000 people. And so we did what we felt was the right thing to do to protect the employees from a potential issue. But as you know, the stock went down roughly 30% when it was announced. And then we just kept working through it and trying to understand it. We hired the top experts. And I remember going around and people said, well, what's your plan? And I said, well, it just happened. So I don't have a plan at the moment, but I'm here to say we're on it. Here's why we did it. Here's what it could potentially mean. And within a couple of months, as we work through it, I'll have a plan. And so this happened in October. By February, we had the plan. We went around, told people what we were doing. And then within a year or so, our team put it all together and said we could restart that. And I remember going around and saying, we have an idea. It's going to cost us about $90 million to open it up again, but not in that area. We're not going back there at all. But there's this other part of the deposit that we could get. And people were saying, are you crazy? Like, what are you doing? And we're saying, well, look, we can get 4 years, and this is a very good payback. We're not going into the older area. But we said the upside is this could be going for 12 years or so. Well, it's been going for 12 years and it's still going. Yeah. And so the return there has been incredible. And that goes back to trust in the process, trust in the team to do the thorough work, hire the experts. And I remember the experts came and said, look, we're confident this will work. Hire another engineering firm. Let them do the work. So it was a very deliberate, conservative approach, which worked out well. But if we didn't have that trust within the constituent group, then we wouldn't have been able to get that back and running.
Yeah, and it's amazing. I mean, just going up into the Val-d'Or region and seeing how embedded Agnico is in that community there. I mean, it essentially is the community. Yeah. And it's a great thing in terms of understanding your position in that Val-d'Or Abitibi region. Can you talk for a sec about like where you see Agnico being positioned in the broad gold mining sector now, and how maybe that Abitibi region does play into to it or not, or whatever?
Yeah, I think that strategy of consolidation and regional consolidation, and as you know, over the years, we are only in certain selective areas of the world, and that's by design. We didn't want to be everywhere. We wanted to be in those areas that we could see the ability to run a business for multi-decades and be the dominant player in those regions. And some of the consolidation work we've done recently has basically given us 100% control of 2 of the top 10 gold mines in the world, Detour and Canadian Malartic. Both have extensive mine lives ahead of them, both going underground, big multi-million ounce deposits, which are the anchor. And if you go from sort of Detour south to Kirkland Lake across to Val-d'Or, so that may be 150 kilometers by 100 kilometers, that region there is equivalent in terms of total resource to what Newmont and Barrick have in Nevada. So it's prolific, but doesn't get the attention because I think of where it is. So we're the dominant player there, which gives us a huge advantage in terms of hiring and getting the best people. Culture helps that as well. But off of that base, we've built a business in Nunavut. And I think that's where there's a big opportunity. Hope Bay we love. I think you've seen some recent drill results there. I know we're not going to talk much about assets, but you can see the drill results. We tie up geological belts in good parts of the world. And so people always ask me, like, what does Agnico look like in 10 years? Our employees ask me that a lot. Yeah. What's it going to look like in 15 years? And so I don't really know what it's going to look like in terms of how many ounces of gold it's going to produce. I just don't know. And for me to be able to say, yeah, this is our target. If we don't get to 5 million, then we're useless and we haven't created value. I've seen companies put a number out there and they make a mistake trying to charge to that number. But what I always say to the employees is, I'm not sure how big we will be, but I know how the company's going to feel. It's going to feel exactly like it feels today, which feels exactly like it felt 20 years ago. And that's culture. So that gets back to where we started. It's got to feel the same, because then you're in a better position to take advantage of opportunities and maximize the opportunities you already have and deliver for all your stakeholders. So we haven't lost sight of that. To actually get bigger and then lose everything around culture, then we lose. So people say, well, how do you define success? Is it share price? Well, that's a big part of it because that's our job. But the beauty of what we've built is that along the way for all these decades is we've delivered for those 3 constituents, which are in our mission statement: above average returns for our shareholders, make it a great place to work for our employees, and make big contributions to the communities that we work in. And we can see tremendous opportunity in Canada, particularly in the north. And so, we'll just keep our eyes peeled and make sure we're focused and stay true to the strategy, stay true to what's worked. And as chairman, that's my job. Pay attention to culture, make sure we stick to that strategy, which has been proven to work for decades because we're good at it. And I think that's where we excel, where we can see our competition. The strategy changes too much. And it changes not because, they determine they're getting better at something. They change generally because that may become conventional wisdom for the space. And we've never done that. And Paul Penny used to say one of the biggest things that's attributable to our success is we just do our own thing. We don't follow the pack. We know what we're good at. We know how to create value. And essentially, we've just followed the best geology into regions that we're prepared to go to. And that's a simple formula.
Yeah, that's great. Okay, awesome, Sean. Thanks. I was going to ask you, maybe if you won't answer to the employees where what the company, how much gold the company is going to produce, will you answer to me what your share price will be in 5 years?
That's a good one. It'll depend on, partly that obviously depends on the gold price, but I think the key is I think that I look at back in August of 2020, these shares were a lot higher than they are now.
Yeah.
And gold price was lower. Yeah. So there's clearly work to do. And I think all that's happened now is there's been a lot of physical buying from central banks that have driven the gold price up, and investors haven't sort of followed in behind buying the gold equity. So our job is to make sure we're the number one choice for a gold investor as they look at the space. And that number one choice for an investor is based on, keeping the risk level in the business low and keeping the quality of the business high. Yeah. And I think, as we've tended to have a better sort of relative valuation multiple over the years because of this consistency of the strategy, the ability to deliver, and the market's trust that we're not going to veer off something that's worked. So the stock's going higher just based on the quality of the business. And the other thing I would say is, and this goes back to it, when I started at Agnico, and this isn't a knock on Paul Penn, it was just the way things were built in those days. On the board at the time was Paul's sister, Paul's insurance agent, Paul's dentist. It was, I'm not sort of knocking it because it worked. At that time, we had 40,000 retail shareholders. We had a large following in the US because they trusted Paul. Right. And what was in my mind as I was a young accountant was that, I had audited bigger businesses. So I knew that there was a level of sophistication out there that Agnico hadn't gotten to yet, but would get to. And it was all around, look, you know what, we know we're a gold mining business, but our real job is to just make it a high quality public company that investors that even they may not have a direct interest in gold, but they want to own it because it's a high quality business. And that's what we've done. And so that bodes well as we move forward, because as you said, paid a dividend for almost 40 years. That's tough to do in a volatile space like the gold business. We've created per share value. We've built, the business is probably better positioned now than it ever has been. So it's not that we're set to flame out. We've actually built a stronger base of people skills, experience, quality assets in the right part of the world. So that bodes well to be able to create additional value and to continue to be a standout in the space, which is that was always the objective. Remember, Barrick was our neighbor for years. We were always the small fry in a region in Quebec. And Barrick would actually, they'd look over the fence and say, why are you guys drilling holes down at 8,000 feet? You're never going to be able to go there. And we kept saying, well, we need to know what's there. We need to understand because we've got a plan. Yeah. And from those humble beginnings, we've been able to focus on the drill bit, on our people's sort of intuition and experience on how big deposits could get. And that's been the basis for the success we've had.
No, that's great. I was going to even say, like, you guys really have an opportunity to trade at a multiple of a royalty company. eventually, if it's a very high quality, the royalty companies traded, at big, as you know, big premiums to the producers. And if you're able to be a consistent free cash flow generator, growing your production a little bit in an accretive way year on year, paying a dividend, I think that's a potential story for you guys in terms of being able to really take the share price to the next level.
Yeah, we would agree. I think the one difference, principal difference that we see between a high quality gold miner and a high quality royalty company is the quality gold miner gets to select every single drill hole.
Right.
Whereas the royalty company, they get royalty interest in good deposits, and they collect checks, but they don't really have a say in how those companies will drill out deposits. We actually get to pick the holes, and we've had an ability over time to identify those deposits that have had a lot of upside. And we look at Canadian Malartic. When we first got involved, when Goldcorp went hostile on Osisko, people asked us at the time, really? This looks like a single digit rate of return. And we said, well, if you take what we know now, we're probably, high single digits, but we think there's a lot more. Oh, how do you think that? Well, this was an underground mine, and this kind of has similarities to Goldex. And we see underground mine potentially developing here, and us using techniques like we're using at Goldex to mine, lower grade material in volume at low cost. And look what's happened at Malartic. We've probably added 15 million ounces in an underground scenario that wasn't there when we made the acquisition of the first half in 2014. So as CEO, my job was just to work with the team and understand where the best geological opportunities were and what parts of the world were they in, and could we, see multi-decade opportunities around those deposits. And that's what we've done.
Yeah, no, it's great. So it's fantastic. Again, it's been a huge winner for us and our shareholders and our investors. And so thank you very much for the work that you've done on behalf of our investors over the years, Sean. And thanks very much for doing this interview. And maybe we can do it again in another 15 years.
Yeah, I'd love to do it. And it's my pleasure.
Maybe.
Yeah, okay, and it's great. My pleasure to work for the shareholders. And thank you and your team for all your support over the years.
Yeah. Okay. Thanks, Sean.
Okay. Take care. Bye-bye. Okay,